Hey, it's Mac with PriceActionTradingSystem.com, and it's Friday, December the 21st. It's a little bit before the close of the market, but I'm going to get out of here early. I'm fixing to start my holiday, so uh, it's possible towards the end of next week I may come in right before the first, the last couple of days there of the end of the week if I'm bored, and maybe do a chart lesson or two. But it just depends on how I'm feeling. So, but definitely. None before now and Christmas next week. So if you're looking for a chart lesson, there won't be any. I will say this, if you haven't already signed up or subscribed to our YouTube channel, there is a benefit to subscribing. It doesn't cost you anything, and I don't make anything for you subscribing either. But if you subscribe, there's some functions in there where you can set it to be notified whenever I update or upload a new video. And that way you don't have to hang around every day or keep logging on to see if the video lessons are there or whatever. You'll just get an email and it notifies you that, hey, there's a new video. And that way you'll know when I'm back or whatever if you want to go that route if you're not already subscribed to our channel. Or if you're subscribed and didn't realize you had that setting, it's in there. Just go into the settings and you can set it where it'll send you an email to update you whenever there's a new video. So, but let's talk about the price action. I wanted to just make a note of this. They talked about the some news came out yesterday about 7 o'clock my time, right in here somewhere about the fiscal cliff, and I guess it spooked the market and people started selling. And you see this kind of stuff in the overnight. And because there's not a lot of volume, and so if you suddenly get a lot of buy orders, you'll see a big spike up, or if you get a lot of sell orders, you'll get a big spike down. And so there's a gap in here from the close yesterday. We didn't fill it today. But my guess is we're working to try to fill that gap. For the most part, we took a little more than half of it back, and then we went into this trading range. And that's an obvious trading range. Right in here, look how flat that is. And look at prices on both sides of the EMA. That's an obvious trading range. Now look, we started trending up here, and look at the EMA. It's moving up now. And then we started trending down here. Now look at the EMA. It's moving down now. And then we started trending back up here. Look at the EMA. Here's where it went flat, and this is where you're kind of in a little range as the trend is changing. Here it kind of went flat. Again, you got to watch your EMA, and it will help you. I mean, you don't want to be trading off based on what the EMA is saying, but it's a good example. And look, as we're going up, how most all the bars are above the EMA till they finally work under, and then most all your bars are underneath the EMA until we work back over, and then they're all above it for the most part again. And so that's why we use the EMA. It gives you a good clue, but that's all that is. And so, but you got to be able to recognize these ranges, and then so there were two ways to trade today. You were trading these little small trends, and you were also trying to trade the range. And you can see the lower part of the range was the more important one. But if you drew your trend lines, you knew pretty much when to try to buy and when to try to sell. And it's really simple. So it's just real standard price action. But let's back out and talk about the trades real quick. And I'm going to try to make this quick today because I want to get out of here. I'm probably not going to go into a lot of depth if I don't have to. But there's a few things here I'll probably want to explain to you. But this was the open of the market right on this bar here, I believe, somewhere right in here. But by the time this bar closed, it was way up here, so it's really risky entering up here. So what I suggest is that you try to drop a limit order about halfway back in here. And notice if you'd have done that, prices pulled back just enough to probably trigger your order, and then it took off up. But really the best way to enter this trade was right here. Notice you had this little tiny bar right here, and this is where I usually like to use the last closes. So you would have either had you might have even had your line right here, and that's probably where it should have been at that point. And notice that this little bar right here, we ticked one tick lower and then turned up. So we're headed back to the EMA especially if it goes past this bar before this bar closes. In other words, it it went lower first and then turns up and goes higher. And so that's a very important clue. And so that's where I want to go long, is right there. And you wouldn't have got filled right there if you waited till this bar was done and then drop it. You had to have it there ready. Once it broke lower and started turning up, you had to go ahead and drop it in there. And now there's a plus and a minus here too. So anyway, I drew this one in green because if you waited to enter here, it was a little more risky, and you almost would have got stopped out on a 2-point stop, because I think a 2-point stop would have been right here or maybe right here. So it was within a tick or two. But there's one other thing I'll show you too. If you entered where I entered, your runner on this trade would have been safe, and you could have ridden it all the way up. But if you entered here, no runners. And even if you dropped your limit order back in here somewhere, no runners, because it came back. This market is just really efficient. And so it's difficult to try to get runners. There'll always be runners, but you never know. And if you try to pick and choose, you'll always get it wrong. So that's why I usually, if I think we're going 4 or 5 points in any one direction, I'm going to try to hold a runner. And you see there's 18 to about 24, 25 here. So there's enough room to where a runner is going to pay off for you. So you want to try to hold on to them here. But even if you miss this trade, and again, I drew it in green for the reasons we just discussed, unless you entered the way I talked about by getting in back here, it was a little bit risky. So it's really aggressive to be entering right there. It would have still worked, but you would have had to ride out all this pullback, and it would have been really it'd been really stressful, and you might have made a mistake before it was over. So, but now you got a two-legged pullback that retests this low that we'd broken below and turned up. You got a nice little bullish bar right there. You go long right there, and guess what? Your runners are safe, and you can ride this all the way up. When we created this double top, I exited here, and but that's the way you want to try to do it. There was a second chance to enter here. Again, a two-legged pullback to the EMA. If you drew your trend line off those first couple of bars, it's a two-legged pullback to the trend line and the EMA. You go long right there. Good for a scalp only, nothing more. And then it pulls back and it goes into all this mess. And you don't want to be entering long in all this chop this close to the highs. So you need to get some kind of setup, and really, you might have been tempted to go long above either one of those bars, but notice it never triggers. And it kind of works lower, and then you get this little move up right here. Let me just make this bar a little more narrow. And you get this nice bullish bar that moves up, then pulls back and tests that area again, and then turns up. And you're looking for a retest to the highs. So this one's worth taking right here. And, now you got a broader double bottom. You tested it twice. Anytime the market attempts something twice and fails, it's likely to do just the opposite or go much further in the other direction. So we're looking for a retest to the high anyway. And now you got plenty of room to scalp out. You go long right there. And guess what? It keeps going higher. And you might have been tempted to exit right here on this bar. And you might have even been tempted to go short on this bar. But a lot of times you get two legs, and you can see there's leg one, then your little correction, and then there's leg two. And it didn't quite, it missed it by a tick or so there, but that's close enough. So if you did get caught short right here when this reversed, you're better off to either reverse with it or probably just exit as quick as you can. Notice that it broke up and then kind of pulled back again. So it would have given you a chance to get out close to maybe a tick or so. But if prices are going up and they go through a strong support, it's usually better to wait on a second entry. And most of the time when you come up here, it's better to wait on a second entry anyway. Notice that, this was a pretty good short for a trading range, But because you got this trend line, it's better to wait on a second entry, and then you don't get a second entry. You really don't get another chance to go short till here. But now you hadn't had a trend line break, and you're so close to the lows in the trend line, it's not worth it. And you see what happened right there. And they trapped a lot of shorts, and then they run it up, and that takes it to the next high. And I guarantee you they trapped a lot of shorts right here. So it's better to wait on the second entry. And if you did get tricked here, because that's a nice bearish bar. I mean, I was really, really tempted to go short right here, and it did trick me to exit my runners on this trade right here, and I missed this next leg up. But now I'm thinking short, and what I did was I went short on a limit order right here above these two. You really can't hardly see. There's two matching highs right there. And I was a tick or two early. It went a couple of ticks against me. But as soon as it turned down, that was the better place to go short, the smarter place. But I like this. Anytime you get two matching bars this far away from the EMA, we've had a trend line break. We got two legs up. There's a good chance you're going to break above that and turn down. And so that's why I went long there. And I maybe got a tick ahead of you, and that's about it. But I will say this, by going short right here under this bar, you would have scalped out, and guess what? It pulled back, and it would have taken out your break-even runner, where it didn't get my break-even runner because I had that one extra tick. So I was able to ride this down, where you didn't get any runners out of this if you entered below this bar. So there's pros and cons to all of this stuff. But you should have been thinking prices at least come back and test the EMA, maybe test this at the very least. And but there's a good chance this is going to be a failed breakout, and we're going to come back inside the trading range. And so that's what happened. This was probably a tempting trade right here. I don't even know if it worked. Let's see if it worked. Your entry, maybe at 25. Yeah, it was just enough to work. So if you took that, it probably worked for you. It is a double bottom, but we've had the trend line break and the two legs up to a new high. We also got a failed break out of the trading range, so a lot of reasons not to be thinking long there. You're better off to wait and make sure that you're right. And we broke lower finally below this. You don't want to be going short yet either, though. And then now you got a breakout pullback short right here. And let me show you how I found this trend line. This trend line was really confusing because, and you might have had it like this, and that would have still got you to the same place. But I kept noticing that we weren't, if you draw that and you drag it down, well, it just doesn't really fit well. And it just didn't look right. So what I did was when I got all these, you could see that I drew that line and I just copied it and drug it over. And guess what? That was your trend line, and then you got your break here, your retest, and off you took. So like I've tried to tell you before, don't always assume that the trend line comes off the top, because what a lot of traders are thinking is this is where the downtrend really started right here. We were still in an uptrend until we got below that EMA and then turned down. And so, but even if you had your trend line like this, you still should have seen this setup. You actually would have seen this setup, but then you still would have seen this one, and this one, and this one. And so, as long as you're close, generally you're going to be all right. But I believe that's the challenge. You can see that. That fits really, really well right there. That makes complete sense. You get your break, you get your retest. We actually overshot it. We overshot it here. So there's different ways of getting to these trend lines, and you just have to play with them sometimes. So again, no short right here. This one's still a little bit risky, so it was better. And if you had your trend line coming off this highs, you might have taken that one. And I was tempted, but when that ended as a doji, that was a no-no in my mind. It would have worked, but I just didn't like it. I thought it was too risky. And then suddenly you get your breakout, you pull back and test that line to the tick and turn down. So anyway, this was your better trade right off that trend line. And you could have found this trend line off those three bars right there just as easily, and then drug it over, and you see it fits on this side real well. So different ways of getting about it. But even if you came off the top, which is normally where you're going to find them, you still should have found this. You just may not have found the channel as cleanly or as clearly. But nice entry right here, breakout pullback short, a pullback to the trend line, the EMA, a couple different reasons. Easy scalp. Any runners were safe here. You could ride this at least down to here, if not all the way down to here. Then you got another, even though we made a new low, this is still kind of a two-legged pullback to the trend line, the EMA, and look at that bearish bar, double top. It goes short right there, easy pickings, runs all the way down. And when it hits this trend channel line, if you found this, you got to be thinking about exiting. And you should have already been thinking about possibly exiting because of these lows down here. And you probably would have moved this back down now when you got these closes here. And look, lo and behold, look where it bounces right where those closes were. And my line doesn't look parallel there. It's no big deal, but stuff like that bugs me. I'm sorry, so I'm going to fix it. Okay, there. Now we got a parallel line down there. And you want to make sure your lines are parallel, because if they're not, it could throw you off. But notice where I had it, the last closes down there, and that's exactly where we bounced. And then notice where these closes are here. So then maybe you move it up and look, there's where you bounce again. So those closes are important. You don't have to have it. You don't have to have this specific and be. But you know, if you got your lines down here somewhere along these lows where you get all these touches, you know where to look for the reversals to set up. So even if you had it there or wherever, you have a good idea of where to have them set up. So this was the first break of your trend line. You got this big bearish bar. What I did again was I dropped my limit order about halfway back, and just enough that it ticked, just one tick through my limit order got me in, and then we're heading down. But when we got all this chop right here, I just went ahead and exited. Glad I did, because it looked like we were going higher for a while, and then it turns back down, and we just couldn't go any lower, and that was it. Even though we didn't make a new low, this is good enough for a retest, and then prices reverse. And then now you got this big reversal bar. If you had a reversal bar like that, it was worth taking. I went long right there. Easy move. No runners on this one, but easy scalp. You pulled back, and then you had this little trap right here. And I found this trend line by drawing it off these two swings right here, and then just you drag it down. Looks a little different there for some reason. I probably lifted this up a little bit since we went higher there, I guess. But that's how I got that trend line. You can see either way, it fits better the way I got it right there. That's I originally drew it over those two bars right there. You drag it down, and you see it fits perfect up through there. So I don't know how that one looked a little bit different, but anyway, that's how I found that trend line. And then you come back, you pull back, you test it, you go a little higher, you pull back and test it again. And so you want to go go long right in here. You could have actually gone long right there, but it's better to wait on this bar to close. And you might have been tempted to hang on, but if you saw the trend channel, which you should have, you know, now you definitely draw your trend line off those two lows. And you go long right there, easy move. You might have been tempted to go short right here. I tried to get short right here, thinking that if this bar broke up, it was going to touch this and turn back down. And again, these are your highs up here. But it didn't get filled, it turned down. And there's no good setup for a short, really, because we hadn't gotten up here yet. So, and we're really in a, you know, now we're in an uptrend. There's been no break of the trend line. But when this bar shot up here and closed on its very low, and and now you got two overshoots of this trend channel. This one was worth taking. Maybe I should have made this one green, but we're back in the trading range, and this is a trading range day, no doubt about it. And so because we were overshooting this channel, and even if you move this channel up, you still see it still fits, and that may be more like it right there actually. And it turns back down. There's plenty of room to scalp out before getting back down here, so I scalped out. No runners, you see it, took the runners, and you might have been tempted to go long right here, and if you did, you might have got stopped out, but if you went long right there and you got caught up in all this, you were better off to exit. But I didn't like going long here because we were in all of this chop and we were so close to the high. But then you come down here and you got this trap, and look at this nice, now that's a nice reversal bar. That's rejection from down here. And look, you've got this low, you've tested it once, twice, and if you try something twice and it fails, then you're probably going to go try the highs, and you got plenty of room here to scalp out. And guess what? It goes up, you scalp out, it pulls back, it takes out the runners, and then it goes higher. So just, you know, this is just a really efficient market. And then I was done for the day. And you don't want to be going short. And, you know, if you were still trading, but it's almost 3 o'clock, there's another setup, and notice what happens. You got one leg up, and now here's your second leg, and you got this little trap down here that reverses. Look at that bullish bar. And, you know, but it's really too late to be entering. So, and that's pretty much it. And this is 21 minutes worth, and I was trying to keep it short today. There were a lot of entries today. But if you back out, you can see it's pretty much just a trading range. You got a trend up to the upside. We had a failed breakout up here. Then you got a trend back to the lower side. You got a break and a retest, and then another trend back up, a break, and then guess what? A move up. You actually had a break right here that was probably good enough. One leg, two legs. Just see if those are measured legs real quick. Excuse me. One leg, two legs, and so it's real close to, you know, maybe missed it by a tick there. So pretty standard price action, pretty standard everything. This is, you know, this is a little scary here. This is one reason why I don't trade the overnight, because things like that, I mean, that could also happen in the daytime, but it's a whole lot more rare than it is to happen in the overnight. And generally when you do get a spike or something like that, it doesn't take it long to take it back. We got most of it back within a few minutes, and then we just kind of got stuck in there. So it's like a 50% pullback or whatever. But anyway, I'm going to wrap it up. Again, this is probably going to be it before our Christmas break. I may come in towards the end of next week, like I said, just not sure. Just have to kind of play it by ear, see how bored I am, see if what's going on. I'm going to take my family on a few days of vacation around Christmas there. But I hope everybody has a great holiday, a Merry Christmas, and I'll see you when we return. And again, I don't know exactly what day I'm going to come back, but if you're just watch for the email, if you subscribe to our YouTube channel, and when I do upload a new chart lesson, you'll see it. So, but anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com. We'll see you next time.